Ladies and gentlemen, it is a great honor to stand before you today to reflect on one of the most pressing issues of our time: the evolving relationship between the United States and China, and its far-reaching implications for global financial markets. Many still believe that we live in a world of open economics, where trade trumps politics and mutual interests naturally lead to cooperation. But my friends, that is no longer true. In today's speech, I will walk you through a rapidly shifting reality, one that markets have yet to fully grasp: the deliberate and systemic decoupling of the world's two largest economies. I will explain why markets are on the verge of a rude awakening, not because of a single event, but as a result of long-simmering political, technological, and strategic shifts that are finally reaching a tipping point. We will examine how U.S.-China relations are transitioning from economic rivalry to strategic confrontation, how global supply chains are being restructured, and how these shifts will affect businesses, investors, and policymakers around the world. Most importantly, I will call on you, business leaders, investors, and policymakers, to reconsider your perception of risk, your understanding of geopolitics, and your role in a world being fundamentally reshaped. Global markets are deceiving themselves. Investors, corporate leaders, and market analysts continue to behave as if we still live in a pre-pandemic, pre-Ukraine war, pre-US-China escalation world. But the truth is, everything has changed, profoundly, structurally, and irreversibly. China's rise is no longer just an economic phenomenon. It is a comprehensive, strategic endeavor with geopolitical ambition. China doesn't merely aspire to become a superpower. It wants to redefine the global rules of the game. And in this process, the United States can no longer assume it will remain at the center by default. We are now in an era where soft power, supply chains, technology, and data are all tools of statecraft. Every move is a calculated piece on a global chessboard. And markets, if they fail to recognize this, will be blindsided when reality hits. Look at the indicators. Stock markets still react to inflation data, interest rate decisions from the Fed, and quarterly earnings. Meanwhile, geopolitical shifts are quietly rewriting the entire structure of global trade. The U.S. is tightening its grip on technology exports to China, particularly in AI, semiconductors, and chip design software. China is retaliating by restricting exports of rare earth minerals. These are not just trade measures. They signal the breakdown of deep economic integration between the two superpowers. If you're investing in companies reliant on China-centered supply chains, you're sitting on a fault line. If you believe globalization is irreversible, you're placing faith in a fantasy that has already collapsed. What we're witnessing is a geo-economic restructuring, where national security, technological sovereignty, and system rivalry override short-term profitability. We have entered a period in which every economic decision must now be viewed through a political lens. Supply chains that once stretched across continents, linking factories in Shenzhen to supermarkets in Chicago, are being forced to retract, adapt, and even rebirth in less geopolitically risky regions. But this isn't just expensive, it's disruptive, and it challenges decades of deeply entrenched economic linkages. Many investors still expect current tensions to be cyclical, that things will return to normal. But let me be clear, the old normal no longer exists. We won't return to a time when U.S. firms had unfettered access to China, or when Western technology was welcomed as the global standard. Instead, a new model is taking shape, one dominated by technical barriers, data regulations, cybersecurity laws, and domestic priority policies. The market's awakening to this new reality will not be instant. It will unfold step by step, shock by shock. A tech firm suddenly banned from selling software abroad. A semiconductor shipment halted at customs due to security reviews. A strategic joint venture collapsing overnight due to a policy shift. Each incident chips away at investors' sense of safety. Each shock draws markets closer to a fundamental distrust in globalization's old framework. But while markets struggle to adapt, a different segment of the economy, emerging countries, rising companies, alternative tech hubs, is seizing opportunity. The growing polarization between the U.S. and China is creating strategic vacuums that nations like Vietnam, India, Mexico, and Indonesia are rapidly filling. This isn't just about moving factories from China elsewhere. It's about redrawing the economic map of the world, where investment flows and manufacturing hubs shift based on political reliability. It's not just manufacturing or tech at stake. The financial sector, long considered immune to geopolitics, is now being forced to choose sides. U.S. banks are restricted from investing in Chinese AI firms. Stock exchanges are pressured to delist Chinese equities from key indexes. The yuan is evolving into a geopolitical instrument. Capital flows no longer follow performance, they follow policy. In such a world, traditional valuation models are losing relevance. Geopolitical risk is no longer a footnote in analyst reports, it's becoming a central pillar. Conventional tools like technical analysis, PE ratios, or DCF models must now be augmented with new variables: political stability, foreign policy stance, and a company's adaptability to shifting global dynamics. Investors must become intelligence analysts. Too few institutions are prepared for this shift. While CFOs monitor interest rates and exchange rates, they lack radar systems tracking geopolitical signals from Beijing, Washington, or Brussels. We are entering a time when a single tweet from a head of state can wipe out billions in market cap. A diplomatic statement can derail a multi-year market entry strategy. And if you think things will calm down after the next US election, think again. No matter who wins, the China policy will not soften. The idea of strategic decoupling is now bipartisan. Legislation like the CHIPS Act, the Inflation Reduction Act, and export control laws are not temporary. They mark the beginning of a long-term trend. And China, with its clearly defined ambitions, is not backing down. They're playing the long game, and they're willing to bear the cost. Given this reality, we cannot afford to act as if everything will sort itself out. Corporate executives must reframe their entire strategic outlook. Quarterly profits alone can no longer be the goal. Performance must now be measured by resilience, adaptability, and geopolitical awareness. We must invest not just in technology, but in political intelligence, cultural literacy, and diplomatic capability. These were once underestimated in the cold calculations of finance, but today they are competitive advantages. A business can fail not because of poor products, but because it entered the wrong market at the wrong time. A company can lose market position because it didn't realize the rules had changed overnight, and that yesterday's partner is today's strategic liability. This is not a time for pessimism. It is a time for clarity. Markets are undergoing painful adjustment, but in that chaos lies opportunity. Opportunity for companies that are agile, visionary, and bold enough to change. Opportunity for investors who read not only charts, but the global pulse. Opportunity for emerging economies to reshape their roles in the value chain. We must move away from passive risk management. It's time to become active designers of this new game. Every business needs a geopolitical strategy. Every investor needs a global risk map. Every decision, no matter how small, from opening an office to launching a product, must be examined through this question. Where does this stand if US-China tensions escalate another level? The shock that markets are about to face will not come from a single crash. It will come from a chain of quiet disruptions, slow, persistent, and deep. And by the time we realize it, the world will already be different. Stability is no longer a given. It is something to be earned, to be defended, through knowledge, strategic action, and courageous leadership. I end this speech with a call to action. Let go of the illusion that globalization is apolitical. Stop expecting that trade will inevitably lead to peace. And start accepting geopolitics not as a threat, but as an unavoidable reality. Only when we confront the true nature of the era we live in can we act wisely, not just for today, but for the future. Thank you for your attention.